Alright guys, so what is up? Welcome back to another video. As I was deciding on what to talk about and just really reflecting on how this economy is going, I really wanted to talk about why our credit scores really don't matter anymore in the sense when you apply for personal loans, auto loans, credit cards. So with how our economy is going right now, we can see a drastic change that is happening within the banks, the credit unions, the financial institutions. A lot of them are really tightening up right now. Like we can really see that people that have 750 credit scores are getting denied because they have thin credit profiles, and people that have a lower score but a thick credit profile are getting approvals. And we can see right now that banks really aren't giving out as much credit as they used to pre-COVID. So when COVID hit, we saw a drastic change in the banking area as a whole. Banks just stopped giving out higher credit limits. They really were very restrictive on who they approved for personal cards, for business cards, for even home loans, just because of everything that happened and how our economy just plummeted during COVID. And right now we're starting to see an influx of people who are just not receiving approvals, even though they have a high credit score. And that's really what I wanted to talk about in this video today. So if you don't know already, a couple of months back, a lot of banks were starting to fail. We saw that banks were really just tightening up. You couldn't even take out your cash with certain banks. And I'm expecting that to happen in the next coming months and even in a few years. Banks are really going to start to tighten up and, possibly fail. I mean, we've already seen that happening throughout the United States with some banks, with some pretty big banks too. And just seeing how our economy is right now, this is something I really want to talk about. So in the past, if you had a 700 credit score, everything was yours. That home loan, that auto loan, that credit card, that personal loan. If you had over a 700 credit score in the past, you could get anything you want. No ifs, ands, or buts. The sky is the limit for how much you can obtain. We've seen a significant shift. Like, it's crazy how our economy has shifted from 20 years ago, even from 10 years ago, and even in 2019, just how everything is just starting to change. So right now, if you're out of high school, you're 18 years old, you can obtain a 800 credit score in a matter of 6 months. Just by obtaining your first credit card and a secured loan, you can get an 800 credit score like this. The thing is yeah, you have an 800 credit score, but you have a thin credit profile. But right now, we are starting to see that your credit score doesn't matter whatsoever. Banks are now wanting to see that you are building relationships. Well, not only banks, but credit unions as well, and even other different financial institutions. Like they're really wanting to see you building a relationship with them and really investing into them as well. I've seen people that have a 750 credit score get denied for certain credit cards and products because they haven't built that relationship with that bank or credit union. So your credit score right now really doesn't matter. What really matters is what's on your credit report. So those who have a 600 credit score but have a relationship with a certain bank or credit union can get their approval. And the reason for that is because one, they're building that relationship, and two, how their credit report looks. They have a bunch of credit cards. They've had personal loans in the past, auto loans in the past. And just really thickening out their credit report. They have a thick credit report. And we are seeing that people that have 600 credit scores but have a long credit history, a thick, long credit history, are getting their approval. Whereas people that have 750, 800 credit score are still receiving denials. And that is because they may have a thinner credit profile. So when COVID hit, that really kind of put some strain on the banks. It's now, how will your credit look in case if there's another pandemic? In case if we're hit during war, like, if something crazy happens, like a war breaks out or we have another pandemic, how is your credit going to sustain another global incident. These banks and credit unions want to now see that you have an overall credit report and overall credit profile that can withstand another hit in our economy. Banks are really tightening up right now. So that means if you have one credit card, obtaining 2 or 3 during this time can help you. If you are responsible and you can handle, some more credit cards on your credit report, I would say to go for it. Right now, if you don't have any loans, get a secured loan. I'm constantly seeing a lot of people in Facebook groups and different forums talking about, I have almost an 800 credit score and I'm getting denied. But other people who have 600 scores are receiving their approval. And this is because of what is happening in our economy and how banks are really wanting more relationship. And they want someone who has a long credit profile, a thick credit profile as well, someone that has a lot of products on their credit report in the case of another economic downfall. There is, in one instance, even a home loan. So there are people who are receiving home loans with, a really low credit score. And people who have high credit scores are receiving denials. You really have to look at what's on your credit report. Because yes, your credit score does matter in the sense if you're applying for a home loan, and that is because of your interest rate. But even those with lower credit scores are getting that same interest rate. So, we're just seeing a big change, a big shift in what is happening in the banking world, in the financial world right now. But I would just encourage you all to continue to strengthen your credit profile in case anything happens, and so that banks can give you your approval. I always say don't have your eggs in one basket. And the reason for this is because if a bank or credit union pulls your credit report and they see that you have relationships with different type of banks or credit card issuers, they're more likely to give you that approval because they can see that you have relationships with all these banks and credit unions, and they also believe that you will build that relationship with them as well. So this is a topic I really wanted to talk about. Yes, your credit score matters in the sense, a home loan, but that's not the end all be all. Your credit score, won't always guarantee you your approval. It's what's on your credit that'll guarantee your approval. With how banks and credit unions are really tightening up and credit card issuers, it's what's on your credit that really matters the most. It's not so much your credit score anymore. So hopefully this was encouragement for those who may have a lower credit score but a thick credit profile. And hopefully this video has helped you in some way. Take what I said with a grain of salt. This is just my personal opinion and what I believe is happening in the economy today. Please smash that like button, subscribe if you haven't already, and I will catch you guys on the next video. Peace.